what's going on inside Washington, D.C., what regulators and lawmakers are thinking about, and what you and your credit union should be focused on in terms of areas of opportunity and risk areas. I'm your host, Ann Petros, NAFCU's Vice President of Regulatory Affairs, and today I'm joined by very special guest, NCUA Vice Chairman Kyle Hauptman. Thank you so much, Vice Chairman Hauptman, for being here today and taking the time to chat about a topic that I know is near and dear to your heart. So,
happy to be here.
Yeah. Let's dive right into the questions. And first, I'd just like to thank you for your sort of behind the scenes leadership within the agency. You've really taken this issue on and helped to get across some guidance for credit unions, which has been helpful so far, I think, for certainly our members. And I'd like to know where your interest in digital assets comes from and, why you've decided to take such an active role at the NCUA.
Yeah, thanks for that. I came in with three main priorities. And you know how it is, you can't have too many. If everything's a priority, then nothing's a priority. One was blockchain crypto space, what we're talking about today, and the other two were our chartering process, which I think is important for inclusion, as well as our customer service, things like Uber-style feedback and recording your exit interview after you have your exam, at least for federal charters. But anyway, we're here to talk about one of those three. And what I have an interest in, obviously, is the Share Insurance Fund and the effect that the meteor is going to have, the meteor that is coming at traditional finance. My true north is making sure credit unions don't become Blockbuster Video because their regulator wouldn't let them do what they needed to do to compete.
So that's the meteor.
The meteor is traditional finance. There are those who think that TradFi, traditional finance, is just going to lose out no matter what to DeFi, decentralized finance. And maybe that's true. But I don't want it to be because the regulator wouldn't let you compete.
Sure. Yeah. So you got to have that flexibility in order to move the ball forward to stay competitive, right?
Mm-hmm. And there will be, there are going to be experiments. And the word experiment means you don't know the outcome. There are going to be good ones. There are going to be bad ones. There'll be partnerships that don't work. There'll be things that do work but doesn't generate the revenue, et cetera. Credit unions have innovated for a century, and my goal is just to make sure they can continue to do so. And I think if we put a regulatory clamp on them and don't allow experiments, which may include mistakes in the short term, then we're going to make the big mistake of credit unions slowly becoming Blockbuster Video or print newspapers or travel agents.
Yeah, well, we certainly, share that objective. NAFCU, one of our advocacy priorities is growth for the credit union industry, certainly. And, another is ensuring that credit unions have all the tools in their toolkit to grow and innovate and to develop, technology partnerships that are going to allow them to give their members, the products and services that they demand. So whether that's fintech partnerships or incorporating new technologies, there's a lot there to think about. So the NCUA, issued those recent letters to credit unions, one being on third-party relationships, so, your broker-dealer relationship to offer certain digital assets, and the other talked about distributed ledger technology. So can you kind of walk me through what those two letters to credit unions mean and what they don't mean, and what do you think, is the next step needed for the agency to provide additional clarity?
When it comes to additional clarity, I always say, you're not waiting on us, we're waiting on you to give us use cases. Now, the one in May was broad. Basically, blockchain is okay. There's no reason by itself to turn down an idea, a vendor, a third-party relationship, what have you, just because, it involves crypto or blockchain or distributed ledger, And I'll say that right now, I would say credit unions, as we sit here in July 2022, have a bit of a head start. Because the banking regulators have said kind of the other way around. They've said none of this is against the rules, but we need written sign off from your examiner first, okay? Right. I believe the way the FDIC phrased it was written notice of non-disapproval, okay? And so the one in December is, like you said, there's two, okay? December last year, and that was about third-party partnerships, which the way it's being used were are there now credit unions that are allowing you to, let's say, buy, sell Bitcoin via your credit union app or your credit union website. And that came about because of two things. Number one, the vast majority of people say, at least when you poll them, that they'd prefer their first foray into crypto investing to be done via their trusted longtime financial institution.
Makes sense.
They're, federally insured, et cetera.
Right.
The second thing was credit unions, like all the traditional finance institutions, have been seeing millions upon billions of outflows to places like Coinbase and everybody else and not getting anything for it. So combine those two things, and we put out guidance. And I want to stress that why was it a rule? I'm sorry, why was it guidance and not a rule? Because it didn't break a rule. Okay.
It's an existing authority, right?
Yeah. And there were a couple credit unions that were already out front, and I think I can mention, no, they're very public about it. Unifi Credit Union, their CEO showed me his screenshot on his phone. And the way they started their beta test was each of the top 5 executives threw in $500 each of their own money just to test it out. So they had 2,500 of Bitcoin. And then they rolled it out to some other places. And, there are a few credit unions out there that say, you know what, this doesn't break a rule. Let's go. And I think that's the way the world should be. What's the point of rules if following doesn't put you in the clear? But one of the reasons I took this job was the relationship between regulator and the regulated. The regulators, especially if they've never worked on the other side of the table, don't understand the concern about vague regulation, uncertainty. They want clarity. Imagine, you know how compliance officers are.
I was just going to say, credit unions on the whole are generally pretty risk averse. And even with guidance, I think some still want to see like a concrete rulemaking to feel comfortable.
Now, some credit unions out there are really trying to be, the digital asset credit union and make it core to them. There's a handful, okay? Right. There's also one called Maven, which is going through the de novo process. They want to be a native blockchain. Even their members voting on, say, the board of directors of this will be done via blockchain. But they don't exist yet. You can look them up online. They're headquartered in Wyoming because that's a good state for that. But here's the point I'm trying to make is it's not just that they're scared they're going to get in trouble, even though it doesn't make a rule. It's how many credit unions are at the margin. Let's put aside a handful of really go-getters, that say, hey, let's do it. Like that CEO that showed me a screenshot of his personal account that was their beta test, right? Let's put those aside. Everybody else out there, they have lots of things to do with their time and money. And, if you're the CEO and there's Kyle's project, my project that has a hint of regulatory uncertainty, and then there's Ann's project, which doesn't have any. Right. Let's put the time and money towards yours, right?
Yeah.
It's not, I'm terrified of the regulator necessarily, but you have, there's two things in this life that limit most of us, time and money. Some of us are short of both, right? Yeah. And I'll just give you a little story on that. Sorry to go on so long.
No, it's all right.
So December, for an example, here's an example of just clarity, right? Didn't change any rules, and Congress didn't change any laws. A vendor went to 30 credit unions to start with this project. Hey, do you want to partner? People buy and sell Bitcoin. They can do it via their credit union app, et cetera. And 29 out of 30 said no or not now, all of whom using the word regulator or NCUA. Now, the one I just spoke of about they threw in the $500 each, Unifi, they said, let's go for it. Everybody else said no. Well, what if we remove that uncertainty? Okay, we put the guidance out. Launched into action all these projects. And as soon as that went out, they call the other 29 credit unions and say, well, at least that excuse is gone. And it was remarkable to see it, just lifting the clarity, not changing any rules. And I think that's a lesson there. And that's one of the reasons I took this job. Yeah. People don't understand the uncertainty. And it's like, we owe them certainty. Right. As a regulator, we should be in the ambiguity reduction business. And even if we think we've removed all the ambiguity and uncertainty today, we get up tomorrow and see if there's any more. And maybe not everybody needs it. Maybe it's a handful of nervous Nellies. But in this case, it launched into action. And it was interesting to see. As we both know, sometimes when you say no to a partner or a vendor selling something, and you say, the government's stopping me. Sometimes it's just a way to make the salesperson stop talking.
Right.
That happens. But in this case, it's been remarkable to see what just adding some certainty to existing rules has changed the business model.
So there was some uptake in those partnerships. And
launch into action. They now have a source of non-interest income.
Right.
If they want, for money that was leaving anyway, for transactions that members can do anyway. You can buy and sell crypto anytime you want, 7 days a week. And now they have it. I'm not saying everybody should do that or not do that, but they should be doing what they think is best for their members. The credit unions, they should be doing what they think is best, as long as it doesn't break any rules. And we owe them the clarity to experiment, because if they don't, there's that meteor coming at them.
And this is just a service to members and not necessarily something that is on credit unions' books, right? We've talked about, custody. And so this doesn't pose any risk to the system, to the share insurance
It's the same as my financial services provider, where I do my paycheck, connects to my Fidelity brokerage.
Right.
And it's the same exact thing. Stocks going up and down don't affect, the insured financial institution. It's the same thing.
So why do you think some credit unions are still hesitant?
Well, I'm not even here to say someone should or should not do this. Maybe it works for some, maybe it doesn't for others, depending on their membership, but this is up to them. It's not my job to tell anybody what they should or shouldn't do. It is my job to let them do what they think they need to do to serve their members, because I think that's the risk in the long run of credit unions and to our share insurance fund. I am one of 3 fiduciaries to our $22 billion share insurance fund. And if we have a slow dying off of the industry because the younger people aren't hip to it, and in some, as we know, in some crowds, credit unions are kind of your grandfather's financial institution. So I think I have a fiduciary duty to make sure that they can serve their members, and we are not putting unnecessary ambiguity there. And we recognize that not everybody absolutely has to do this project. Some are sitting on the fence. In that example we talked about, limited time and money. What do you do?
Yeah. It's a risk tolerance question. What is most appropriate for your members, for your community, and if there's no demand for these services, then maybe it's not a worthwhile endeavor. Right?
Sure.
Yeah. So, what do you think is the biggest opportunity for credit unions here, aside from just offering their members a service? And maybe this kind of gets into some of the distributed ledger technology issues. And then I think we've already sort of addressed this, but the flip side is, what's the biggest risk?
The biggest risk is not adapting. And again, I don't pretend to know exactly who should adapt in what manner. But if I can step back for a second, there's crypto and blockchain. And we just rewind back 2008, financial crisis. I was at Lehman Brothers then when it went down. I'm very familiar with the chaotic nature. And there was, in response to, we can't trust government or banks or what have you, Bitcoin was created in 2008. And the underlying technology is called blockchain. So it's almost like a lot of scientific things were accidental discoveries. You're trying to do A and you discovered B. Well, Bitcoin does work. They did achieve what they want. Any human being with internet connection can send money to any other human being with internet connection with no intermediaries. You don't require to trust anybody. They call it trustless. And you can do it 7 days a week, 24 hours a day. So that's kind of cool. But on the other side, this thing called blockchain, this verification mechanism, I described as kind of like a shared spreadsheet where everything is recorded, but it is impossible to hack or change. Even if we have like a Google Doc, right? Good product. I'm not here to knock it. But what if Google goes out of business? Somebody at Google could probably hack it. Hell, one of us could probably do it if we knew what we were doing. And
if I had that sort of ability.
And there's no central database. I've heard a professor said, if somebody wanted to change their grades in my class at this university, somebody out there might know how to hack into the university's computer.
I think there have been some scandals like that.
And Ferris Bueller, he does. He changes his days off, I remember. But that's impossible with blockchain because every computer has a copy on it.
Multiple nodes, right?
You couldn't hack the Bitcoin blockchain. There's millions and millions of computers, right?
Yeah.
You could hack 1, 2, 5, 10, Anyway, so it's very secure and trustless, and it's immutable, and there's a lot of things you can pile on top of it, similar to the original internet. So crypto is the shiny object, and it gets a lot of attention in terms of investing, in terms of buying it and hoping it goes up, okay? And we watch CNBC, and now they have the Dow, the S&P, and then the Bitcoin price, and they have the Ether price, et cetera. That's the shiny object, but the tool of blockchain, to me, is the most interesting part. And if you remember the first .com boom in the late 90s, that was the first time a lot of people heard of the internet and heard of, .com, right? And then we had a crash. And if you didn't know any better, you'd say, well, that was a fad, that ended. Well, it's true that investors bid up the price of something and there's a crash, which has happened all throughout history and it will continue to. But hold on a second. This core thing called the World Wide Web, that was not a fad. Mm-hmm. That kept going every day, getting bigger with more uses, and it's changed everything about our life. I see that the web, the internet itself, that's blockchain. The .com stocks that went up and down, maybe they were undervalued, some people lost money, some people made some money, that's crypto.
Oh, okay.
And so if you're a credit union, when people get nervous about all this, I say, you already did all this. You did it 25 years ago. And then when smartphones came out, you did a version of it again. You did the same exact things. You took deposits, you made payments, people checked their statements, they got their tax forms, you made loans, you made investments. Same stuff, you just did it a different way. Mm-hmm. And imagine if there was regulatory uncertainty about whether or not you could do all of these internet services, online banking. Online banking then became mobile banking. Mm-hmm. That's sort of how I see it. And there's a lot of talk about, oh, you're going to buy and sell crypto? Hey, that's cool. But the use cases to fundamentally change how you did things, that is where I see blockchain, the same way the internet changed how credit unions do things. Set aside the investment angle entirely.
Right. So you're saying there's some truth to what a lot of people in the industry are saying about crypto, that it's just a fad. It's an extremely volatile asset. So, we've seen prices go up and down.
No, I don't. It's not my place to comment on markets.
Sure.
I don't own a dollar. I'm not allowed to in my job. What I'm talking about, the shiny object of .com investing, when people thought about .com and internet, for a while there, all they thought about was CNBC and watching.
Just that and not the internet.
Now, investing in the internet in the long run has been terrific, and lots of internet companies have been funded by the public markets. That's not a knock. There's nothing wrong with internet stocks. It's just that in the early days, that's what people thought of when they heard of internet. Right now, some young people were like, "Oh, we can do email now, and this is neat. And I can check the weather in a different city."
So people may not really understand fully
because
yet
there's
the
a shiny object.
Yes. Mm-hmm.
Right, and then the same way, again, when that 2000. .com crashed. If that's the only way you thought of it was those overpriced stocks that crashed, and I'm not here to say any cryptocurrency itself is overpriced or underpriced. The point is that some of them are useful.
Right.
Some of these tokens are useful and can fundamentally change the way credit unions do business. And done correctly, the experiments should lead to the continued success of credit unions. Mm-hmm. And more importantly for me, our share insurance fund.
So some of that blockchain technology might carry some efficiencies, for example, like smart contracts, things like that could
100%,
help.
Yeah.
Make
I know I keep
easier.
coming back to the same theme, but the shiny object of crypto. And listen, I know our first piece of guidance was about buying and selling cryptocurrency. It was 100%.
Because you have to address it, right?
Also, it was an easy thing for us to get done at NCUA. Mm-hmm. I'm all about find things that are achievable and get them done. Mm-hmm. And that was already happening, as I mentioned. Mm-hmm. So that was an easy one. It wasn't hypothetical. We could speak to credit unions and their vendors, our project that they already have happening, which they've already determined doesn't break a rule. So that was an easy way to get guidance out, right? It's already happening. It's not hypothetical. The nuts and bolts have already been worked out, at least on some level, right? Mm-hmm. So yes, our first piece of guidance was about the shiny object. But in May, our second piece of guidance, which is, I have to say, Ann, is I may be more proud of than anything in my professional life because it was broad. Mm-hmm. And it just said blockchain is okay. We were throwing around ideas, is there another use case or something?
Right.
In this whole space, what's going to be interesting? And I think there's a lot of things. You mentioned smart contracts, probably great for loan participations. There's title. There's a lot of things it could be used for. The same way the internet's used for a lot of things. But we said, wait a second, why don't we just do a broad one? And everybody out there, if they're listening, if they're a credit union or a vendor, there's no reason from NCUA's standpoint that you should not do something because it involves digital assets or distributed ledger. go for it. Try things, unless it breaks an existing law or existing rule. And again, they have a head start on this, but there's all kinds of use cases. And before I forget, the one that's made that's broad, I've been saying this lately. So, I'm a Republican point D. But the model for that was 1997, what I think may have been the greatest economic policy in my lifetime in terms of affecting American jobs, American financial security, food on the table. Clinton-Gore administration put out principles for the internet in 1997 on whitehouse.gov, a website that itself was only like 2.5 years old at that point. And it was just broad principles. Wasn't even a law. And number one, the private sector shall lead, right? And they had 5 of them. One of them was on taxes, which is why we didn't have to pay sales tax for the first 20 years of internet commerce. Anyway, it was clarity. It was early clarity, which is the best kind, the most valuable kind. And it was a top-down thing from the White House saying, this new thing called the internet, to all who are concerned, the federal government and every department, we want to let this flower bloom. And there were ups and downs, and people won and lost money. But I think as a result of that Clinton-Gore guidance, and if I encourage people to Google it, it's kind of funny to read it now, talk about the information superhighway and all this. It was just language from back then in the 90s,
right.
But anyway, they put out this broad, early clarity saying, let these flowers bloom. And America won the internet. We absolutely crushed it. We got the most jobs, the most headquarters, the most investment dollars, the highest investment returns. And for all, the disruption that disruptive industries do, we got as much upside as anywhere in the world. People all over the world said, I want to work in that business. Man, I wish I was in America. I'd like to be an investor in that. Man, I wish it was in America. That'd be a lot easier.
So you think there's the same sort of opportunity
yes,
here
I sure
for
do.
financial institutions?
And now in my, this is not, our guidance was not a White House pronouncement. It was just in our little corner of the world at NCUA.
But it's a start.
But that was the model for it. Broad, instead of getting into use cases about, auto title or whatever. Hold on. The easiest thing to do, the best thing to do now is just broad. Blockchain is okay. And we made a point in the letter of saying, yes, there may be needed clarity on particular use cases later.
Right.
We expect to hear from you if you need that. There's another compliance officer out there that says, okay, I see this, but I really want to see some guidance. So we know that. The second thing was credit unions are kind of a little corner of the whole financial world. We wanted to put a bat signal up that said, hey, folks, credit unions are over here. It's a decent market, 140 million Americans, $2 trillion in assets, and credit unions sometimes, I think, need to wave their hands and say, hey, Silicon Valley, hey, crypto bro, hey, tech folks.
We're open for business.
Yeah. Or credit unions over here. Make your app or make your partnership for credit unions. Because as you know, sometimes you have to tweak things for credit unions running through your bank. The banking world doesn't have to shine a bat signal. Everybody's, investors are looking at that. The insurance world and the general investing world, stocks, bonds.
Very different, yeah.
Yeah, but credit unions, I'm glad that we're early. I mean, we don't control what the other agencies do. But it was trying to send a bat signal exactly. Hey, credit unions are cool. It's a good market.
Yeah.
Make some cool stuff for them.
So you're hopeful that a lot of credit unions will come to the agency with their use cases, with ideas, innovative ways to incorporate this technology and sort of get the blessing from the NCUA to move forward?
This is not an application process. Again,
do you foresee perhaps that sort of opportunity? If we do our job right, you shouldn't. It's not Mother May I. You shouldn't have to come to us. We've already put out the rules. What's the point of going under the speed limit if you can still get a speeding ticket? And the whole point in May was to say there's lots of applications out there. If you think that you want to pursue a partnership, I'm speaking now to a credit union. Don't let us stop you. And if you start losing ground to other types of financial services providers, don't blame us, because they get to do this cool, easier, cheaper, more secure way of doing things. So it's not that we're hoping they're going to come to us. Every time they come to us, that means we haven't put out enough guidance. Well, but it's tough because, again, the risk-averse nature of credit unions, without having the specific clarity, some institutions may feel hesitant still and may want that, Mother May I sort of process because they're afraid of what may come at exam time.
They don't like they don't want to raise the eyebrow from their examiner.
Right.
They don't want to put a bunch of time and money into something.
Right.
And then find
That's
out
members' dollars.
you're not supposed to do it. Meanwhile, there's other things they could be doing with that time and money. So it's not even just fear. It's like we said earlier when we started, you have other things to do with your time and money.
So what comes first?
And so you don't want to spend time and money on things that will be a waste of time, will get you in trouble, or, what if you go and you ask a regulator and they say no? That means they now think management's kind of risky. You've literally just asked them, and they said it's too risky, right?
Yeah.
So that could, affect your rating. So, the more we do our job, there should be less ambiguity. What is the point of the rules if following them doesn't put you in the clear? Okay. If there's something bad out there that someone's doing and damaging, it's not against the rule. That's on the rule setter. Okay. If a road's super fast and people are flying down at 100 miles an hour, but there's no speed limit, well, it's bad driving. But it's also on the authorities that there's no speed limit. Anyway, we are in the ambiguity reduction business. And you're right. There are use cases coming at us that we're talking about. But the whole point of the May one was go forth and do what you need. If you don't want to do anything, that's cool.
Yeah.
But don't say no to something with digital assets or distributed ledger because you're worried about NCUA.
Yeah. You have the opportunity to be creative. So if you
I hear
choose
some
to
neat use cases, some of which are already launching.
Yeah. I know, some credit unions may be concerned about Bank Secrecy Act and money laundering. And members of Congress are certainly concerned about that with crypto. But again, is that just something that is divorced from the underlying technology and something that credit unions shouldn't be worried about when it comes to distributed ledger?
Now, the bad rat, do criminals use crypto? Sure. I believe it's under 0.3, 0.4% of all crypto usage involves criminal behavior. But if you want to say, ooh, this new technology that billions of people are using already, it's bad because criminals use it, you're going to freak out when I tell you about cash. In terms of a percentage, okay? Right. And remember, it's the solution, not the problem. For example, one of the things people are talking about is digital ID, a self-sovereign ID, where you own your ID, and with all kinds of metrics, right? Not username, password. As I understand, some credit unions are already using a blockchain-based ID mechanism when you do a call center, right? So they can't see you physically, they can't see you on a screen. But there's some really neat stuff out there that will probably help with your KYC, AML issues, and in theory, will create new business lines. For example, some people don't do remittances. So a lot of credit unions don't.
It's gotten
Even
expensive
the ones down by down by the southern border where there might be. People withdraw money from a credit union and walk down the street to a Western Union, whatever, and pay a lot more than I think they should. And these are other ways to do that. I think there's a real inclusion angle. If Congress or the administration is too heavy-handed on this, I think that may wind up counter to what they want to do in terms of inclusion. We talk about folks who are trying to provide services to the Afghan refugees, right? They don't have a photo ID that you and I would have. They have the special immigrant visa. People came out of prison that if they had an ID, it expired a long time ago. I find the whole thing strange that someone in prison who serves his term and gets out doesn't have a government verifiable ID. If there's anyone who should be absolutely sure of your identity, it's the guy that locked you up for the last 20 years.
Fair enough.
And if the government did it, either state or federal, right? So there's anybody who could prove to the government who they are. Should be that. If you got that, well, they'd be let out the wrong person. So, and for that matter, refugees from Afghanistan, we're absolutely certain of who they are, but somehow, our ID process is broken to get these people, away from the unbanked. But there's a lot of use cases out there, and I think it's very important. And I came to this job from the Senate where I didn't just work on credit union issues, it was broader. And I have one of the reasons I got interested in this, I maybe should have mentioned at the beginning, is just the fear that the United States is going to fumble the football on the 1 yard line and not do what we're capable of. We have everything in place to be the big winners of this industry, just like we did with the internet. All we need is clarity from government. And I'm trying to do my little piece. And with my excellent fellow board members at NCUA. And again, that Clinton Gore guidance, we're trying to do things like that. And if we've just got, I think, a terrific future in this country getting jobs and investment from this industry if government will allow the clarity.
Does winning that race mean adopting a central bank digital currency?
Yeah.
Or competing with other countries,
Yeah.
say China.
I think what matters a lot is that the U.S. dollar retain its place, okay? And it has to be useful. So as of right now we've had a fair bit of inflation last year, but the U.S. dollar is the number one product on the market when it comes to currencies. And it's earned it because it's a quality product. It's astonishingly liquid. You can move billions in and out of it, all day with barely causing, any change. Central banks around the world use it. Bad guys use it too, as we said. Apparently more than half the $100 bills are outside the United States. But anyway, the U.S. dollar is, and we largely benefit, right? Some exporters wish it was weaker, but that's as the French economic minister called it a while back, an exorbitant privilege to the U.S. But if the U.S. dollar lost its place as the global reserve currency being used in the majority of all foreign exchange transactions, if you think that interest rates are high to buy a house now, wait till the dollar stops being the global reserve. That's one of the main reasons our interest rates are artificially low. Right. Given the massive deficits we run in this country, is financed by people who want dollars. So my answer to that is, it's not so much that there's a CBDC itself that matters, but the dollar retains its market share as the number one product on the market. And that includes being able to be distributed on ledgers. You don't want to be the single best video store in 2004. And somebody out there probably was, right? Somebody had the best horse and buggy in 1910, and it was the best. But it didn't have these other features that the market came to want. So CBDC, I can see how it could have some uses. It's extraordinarily important if we do join the countries that have an official central bank-backed fiat currency, that we don't go the Chinese route where they like the lack of privacy, where they track the transactions. I think there's some partnerships out there that are looking at doing a public-private version of this so that they can't see every single transaction.
And that sort of defeats the purpose in some ways, doesn't it? Incorporating this, distributed ledger.
It doesn't mean that I think the government should still need a warrant if they know I paid you or I paid somebody else, the transactions. The Chinese want to have all that data. And this is not a conspiracy. They're very open about this.
Sure, yeah. And they're not trying to hide anything. But this smells to me of kind of what we saw last year with that proposal to, have the IRS collect, all of that information over something ridiculous like $600 inflow and outflow in a year. That was ultimately revised upwards, but still.
I know what you mean. So, I don't like to say it depends. The thing that we know for sure is that it's in our interest to keep the world buying dollars. And if that means adding features to it that it doesn't have right now, like being able to be moved on a blockchain in seconds, then I think it's very important to do that. A CBDC, it's possible, but there are those who say, with some credibility, I think, like U.S. dollar coin issued by Circle, that's very useful. It'll do pretty much what you want a CBDC to say, except it's not issued by the central bank, right? Now they've got their reserves, it's there, and as we've learned in the last year, there's two kinds of stable coins: stable and unstable. And so anyway, on that topic, what matters is if the Fed does do this, and it'll take a while, it won't be anytime soon, that they do it in a manner that privacy is maintained. Nobody at the Fed or anyone in the government should know if I pay you for my digital wallet. I pay you, right?
Right.
Nobody with a .gov address should have access to that information. And it can be designed that way, but I think it's super important that it does. But in the meantime, there are some providers out there of U.S. dollar stablecoins that do a pretty decent job.
Yeah, that's fair. I mean, I guess it remains to be seen what happens next. And like you said, we're still a ways out from anything happening.
I believe, you remember, Chris Giancarlo, former CFTC chair, he has a digital dollar project. I think it's digitaldollar.org, but we could check. And I think the way they're thinking of it, this is my opinion, and my opinion doesn't matter for the Fed issuing a CBDC. The way they're thinking of it, where we retain privacy but get the utility, is the way I'd go if they were going to issue one.
Sure. So what role does Congress have in, not CBDC, but, legislation related to to stable coins, to cryptocurrency, to regulating this overall realm?
Yeah.
And the reason I say not CBDC is because, we have to have some more details on that before Congress can even
that's the one,
get
there. I'm giving you the it depends answer on that one. But yeah, Congress plays a role. And I'm not here to tell, it's not my place to tell, that branch of government what to do in any means. But I'll say this. Remember we said, people back in the 90s, man, some kid that's a computer programmer, man, I wish I was here. That's where all the jobs are. I wish I could get a visa to go to the U.S. And investors like, oh, man, my local investments aren't nearly as good. Or, Silicon Valley people that got in on all those deals. Investors wanted to be here. Entrepreneurs wanted to be here. Workers wanted to be here. And even if you didn't have that view, you still benefited, okay? Yeah. What I would say to Congress is the worst thing that can happen is we get all the downside of disruption and none of the upside. We now have a situation where those people aren't yearning to be in the United States, and that's not what should happen. If you remember Facebook's Libra project,
yes.
And the guy who was in charge of that, David Marcus, when he came to the Senate to testify, he told me, he's from France, and he came to the United States in the 90s because he wanted to work in the internet economy. Okay, and France is not some desperate place; it's a pleasant country. Okay. So, a developed European Union country.
Sure, yeah.
But he still left to come to the United States back then. And he said it is so strange now to see people wish they were
somewhere else.
To people outside the United States. This is America. We don't go for silver medals here, right? We want to be the place people are yearning to go to, not from. And to see CEOs, tell college classes when they lecture, incorporate your company outside the United States. Because, listen, if you think this is all fad and it doesn't matter, then let's not worry about it. It's going to go away, okay? And it's not useful, so not many people are going to use it. But if you think like I do, that it has a tremendous potential, many of which we probably don't know of right now, at least I don't, then you don't want to get all the downside and none of the upside. Canada and Mexico, they lost all of their video rental jobs. So did we. Everybody did. But we at least got the headquarters for Hulu and Netflix and the workers who got there and the ones who got stock options as early employees.
So, of an advantage.
Canada and Mexico, all they get to use the product as a consumer. But when there's something innovative, the three benefits of the jobs, the investment opportunities, and then the use of the product. Right. Folks in other countries get to watch Netflix. That's cool. Maybe they have a local office. But they got way more downside relative to the upside. And so to have the disruption elsewhere. So just use the internet, for example. Other people are around the world using Facebook and Instagram, and they're watching Netflix. There's Netflix Canada, Netflix UK, and I used to use Netflix Japan when I lived there. Other people consuming our products. We're going to wind up in a world where all the providers, right, the people who may offer title for real estate and cars for credit unions, you're going to be paying a Singaporean company or what have you. Meanwhile, we'll get all the disruption. We're going to get all the downside. That's not very specific, but that's my message to any policymaker in this country. And that disruption is coming no matter what. The only question is, can we not only, we can soften the disruption and win, and especially in this country. When I say fumble the football at the 1 yard line, I mean that. We are so close to crushing it. There's a pretty positive future if Congress can provide regulatory clarity so everybody knows, launch those projects in the U.S., go ahead and invest, et cetera.
Yeah. So, and embrace the disruption and don't.
It's what we've always done. It's what this country's always done. And now we have this new thing, and it's, wow. People don't want to be in the U.S.
Yeah. And going too far too fast, so the regulatory structure can really
and
put a damper on all this.
How weird is it to be Americans and venture capitalists say, we'll look at investments, the founders and the business model. Being in the U.S. or relying on the U.S. market and U.S. regulatory clarity is a negative. Yeah. Oh, American company? All right, that goes down a notch in terms of whether or not we're going to invest.
Right.
That's not what it's supposed to be in this country.
Yeah. It's gotten very expensive. All the rules make it tough to figure out.
Just
what to do,
vagueness.
and,
Are you going to be okay? Are you going to get sued, et cetera? And, a lot of innovations have required this in the past. All of our traffic laws were set for horses. And just one example, I remember 1898 was kind of a famous case. A cab driver of a horseless carriage, one of the early automobiles, cab driver in New York City got arrested and jailed for driving his horseless carriage above a gallop, which is apparently about 12 miles an hour. I guess I don't know much about horses, but there's walk, gallop, and run, right? Those are the three speed limits they had, And some places you had to walk your horse.
Slow down in the middle of town, right?
And these speed limits have been set since New York was New Amsterdam. And had we not changed some of these rules, the car industry and all the jobs that we've had with it for the last 100 years may have been elsewhere.
Yeah.
For example, I guess the early cars would stall out unless they won a certain speed, like they would stop, and they kind of had to get going. And had we kept all these rules for horses, we'd still have cars now, obviously, but we wouldn't have had the opportunities we had in that industry. And I think there's quite a few lessons in there. This has happened before. Trying to put a square peg in a round hole isn't going to work, and all we're going to do is say, man, I wish I could get a job at so-and-so, but I can't because they're outside the U.S.
Yeah, right. Yeah, it's definitely a fate that we should try to avoid at all costs.
The American way is to avoid that.
Right, yeah. Well, any final thoughts? What do you want, credit unions to take away from today's conversation? What's your, bottom line, your big message?
My bottom line is, one, as Americans, we have an opportunity, and I don't know exactly what clarity looks like, but any credit union, from the state level on up, should be asking for clarity because of the amazing upside we can get. And then the last thing I'll leave you with is, you shouldn't be waiting on NCUA, we're waiting on you. We want to see what words would you need on a page, a letter, a rule, that will truly turn the needle. What guidance you need that will launch projects and provide real value to credit unions. Because that's all we do. We're a regulator. We put words on a page. Some of them are rules and some of them are guidance. That's the only product we have. And if, like you said, there's a use case, we're talking about digital ID a lot right now, helps with KYC. So that's a cool one. And that might need some guidance. It might. The whole point of the May one was we're trying to get rid of 80% of the ambiguity. Go ahead. And the benefit of that May broad blockchain is cool guidance is that at the very least it means we're not about to put out something the other way.
Yeah.
Because as you know, when people fear this doesn't break any rules, but in a hot topic like crypto and blockchain, it's not unreasonable to think that you might put a bunch of work in for a month and find out it does break a rule because they do a new one. So that's my message. Talk to us. If a credit union's afraid to talk to the regulator, which isn't how it should be, but that's what you have NAFQ for. That's what you have your leagues for.
Yes.
If there's a vendor or a third party or a VC firm that's got an investment in someone, have them talk to us.
Right.
They should. It's their business. Remember when I started and I said there was 30 credit unions that got asked about that, partnership to buy and sell Bitcoin. 29 said no. 1 said yes. The 29, I never heard from them. None of them said, hey, by the way, we'd like to do this thing. We just, we could use, nobody talked about it. I never heard about them. I talked to the one who said yes, and then the vendor. Now the vendor cares because this is their entire business.
Right.
But for the 29 credit unions that said no, it's one project out of a bunch. It's one of many things. So that's the message. And talk to us. What do you need? And we want ideas that move the needle. Where do you actually need guidance? The whole point of the May broad guidance was go ahead and conquer. But if you know something that you really need words on a page that will provide actual value, something that is cheaper, faster, better, more secure, and you need NCUA clarity to do so, that's the message. Talk to us about that.
All right, I second that. Well, you heard it direct from NCUA Vice Chairman Hauptman. Please come to NAFCU, to your state, league, to the NCUA if you feel comfortable talking to them about your ideas, how you're incorporating distributed ledger technology or any other technologies. We want to hear from you. NAFCU has a working group on digital assets, and I encourage you all to reach out to me or anybody else at NAFCU to ask about that. So that does it for today's episode, and thank you again so much, Vice Chairman Hauptman, for joining me, and until next time.